Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Chelsea Oliver. Welcome to today's morning call. We have mostly green arrows around the world today. Europe is broadly higher with the DAX up 2%, and in Asia the Nikkei is up 3.6%. The rest of Asia also seeing green arrows. Looks like overseas kind of followed the U.S. strength yesterday and had a good day.
Yes, like we were the head that led it. You know, if you remember yesterday, everyone thought the world was going to end, and then our markets had a strong session. So overseas is following suit. And you do have, Europe broadly higher, the DAX as well. I think it's even up over 2% now. And Asia, big day with the Nikkei. So anyway, you look at the chart of the EWG, and it's kind of getting interesting. We've talked about this downtrend, in the DAX and the EWG, which basically, it's getting close to breaking above, almost above the 200-day. So, if people just are shorting this rally, this really hasn't even begun. This just came off the lows. And if you look here at the EWG, you could see that yesterday you had a really big engulfing day that held above the 8-day, and now is above the 200-day for the first time. So if this stays above the 200-day, which is probably going to extend, you could see, I don't know, maybe a move up towards this area that would continue to provide a tailwind for our markets, considering we're almost at the highs. And then you have, a quick look at the FXI, which we've been also looking at for China. And, the 200-day here is all the way, into the 35 area. So with that being said, it could at least touch this. Why wouldn't it, considering most places around the world are? And then if this happens to get through this area, the next spot for the FXI could be closer to 40. Remember, this was as high as 52. So this trend off the lows has remained intact, and now it might get another push to see if it could hit the 200-day. And if you want to get a closer look here, that 200-day is closer to 35.74. So again, above the 8 and 21-day, and I know it's kissed it a few times, you try and be long versus just thinking short.
S&P futures are up 8 to 10 handles, even after some key stocks were down after earnings. Would you have expected that?
After hours yesterday, everyone was hitting me up saying, oh, look at all of these, names lower, which we'll get into. So I was like, oh, I'm not long. This is going to be a little complicated. And then I woke up this morning, and like you said, we're up 8 to 9 handles. So maybe that's because oil is up and the rest of the world's up, and we've been one of the strongest, sectors, or one of the strongest areas. And you look here at the S&P, you'll see, yesterday we came in and no one knew what to expect. What we went over here, Chelsea, was this spot. I said, you can't get too bearish. Remember that whole little saying? If we hold the 8-day, which we did, so you could have gotten long when it reclaimed 2076 or covered your short, or you could have gotten long when it took out this 2-day range and closed on the highs. This is not a pattern to look to short, where you have up, sideways, close strong. Well, anyway, we're opening up today. So, you almost have to look all the way to the left here to see, all this resistance. So, first time we get up here, are we going to just blast through, 2130? Probably not. But, we are getting close to, you have your 3 different pivots. We're already above this one. So this is your next point of reference. So just say, write down 2103. Okay. And then this point of reference here is 2116. So 2103 and 2116, are the next two spots, because that's all you know. And then you have the prior highs here. And then today also look to see, I guess, if it opens up and goes red, then you could use this 2094, which is yesterday's high, as your pivot. So ultimately, this trend is, this is a bigger picture look, but you go closer up, and you try and say, how did this happen? The economy is not great. Everyone, is so damn bearish, but, above the 8 and 21-day, which we've been up above this entire time, you try and be constructive versus, just trying to short and looking for a top, because that's gotten, everyone absolutely nowhere. And the last time the bears had their chance was right here, 2041, when you remember, and it got engulfed.
The first stock that reported yesterday was Netflix, which is usually important for action in high beta tech. Getting hit. Do you mind showing us the chart, some line of support, and then how will that affect Google and Amazon, do you think?
Right, because like most of the high beta names, kind of look at each other to see what the risk appetite is. So we'll see if the street treats them as individual reports, or they try and sell them as groups, or not. So to me, I think Netflix is not that important, because I'll get into Google and Amazon, they're up. And lately it's been is Amazon eating Netflix's lunch, et cetera, et cetera. So you look here at Netflix, and the stock hasn't it's been kind of important to the rally, but not like the key of it, considering it's not back at highs and it's just been trending and grinding. So at this point, the 200-day is right here. Okay, this is 99. What is that? 99.57, and then you have this spot here, which is like 96, and this 96 to 99, I think, is a very big spot. This is where I spent a lot of time also after hours yesterday, and this is also about a 10% move, which is what the straddle, had priced in. So, the way and well, if you look here now, by the way, this ascending channel is broken. So we'll see. We need to see what happens here, and then how much of this gap stays open. And if this gap stays open, it's a huge one, and there's no rally, chances are, you might see some risk come off. But if it opens up around here, closes sort of strong, and the next few sessions fills the gap a little bit, then it's just in stride, so to speak. So with that being said, we'll check out this area, and to quickly touch on Amazon and Google. Amazon, what a nice strategy that we had here in the morning call. This was your first one with the red dog reversal, and then closer up we just went over this so many different times. Finally it broke out. It's opening up a little bit. It's very extended from the 8-day. I would not be chasing Amazon long, whoops, but sometimes it doesn't mean it's a short. But if you're looking to short it because you think some people might get scared saying it's priced for perfection, kind of like Netflix, then here's one spot of resistance, which is probably going to open above, and then maybe use your 5, 15, 30-minute pivot. So if it happens to make a high of 641, comes off it to 638, short versus 641, and then if it happens to trade below yesterday's high pivot, which is 637, maybe you'll get yourself a cute trade, only because look how extended it is. But overall, you don't be shorting Amazon just because of Netflix. The prior highs are right here. So we'll see what the case is. But again, into my day count rule, I would not be buying it. If anything, I'd be seeing if it goes from green to red. Same thing goes for Google. It's acted very well. It's up instead of down, which is a good sign. Last viable pattern here, which is what we look for, was your red dog reversal there, and then when it cleared this inside range, and now it just looks like it's on its way up to prior highs here, but it could stop along the way anyway, any which spot. So here is your pivot from yesterday. Can't get too bearish if it's above 788, but again, you don't want to be trapped if it opens up and goes red. So it'll be interesting to see how these names handle today, and whether or not Netflix opens lower and heads lower, or opens lower, stabilizes, and then comes a decent percentage off those lows and kind of doesn't look fully broken, but just in the penalty box.
Right. And then we had IBM. They also reported yesterday, and it seems like their revenue is having some issues, maybe.
Yes, for like 16 quarters they've had issues.
Right. Can you show us some support on that chart, and then how will it affect Apple and Microsoft? Right,
because all these mega caps don't trade exactly together, but they do look at what the other one's doing. So IBM was a pretty big mover in the last 2 months to the upside. So we needed to have a pretty big report in order to continue. So the report wasn't really anything new, but again, after a move like we've seen since 160 all the way up, people wanted a little bit more than declining revenues for however many quarters that was. So if you want to look here, this is a support spot. This is 140 where it's not near, and then you have the 200-day right around this 145. So same thing as like a Netflix. What does it do? Does it open here, and then the opening 15 minutes will the low be put in, and will it try and grind back up, and people will say, wow, I don't care about this quarter. The dollar's lower. It's going to do better. I have nothing on. I want to buy a dip, because if you look where IBM came from, it's come from a lot higher. So I'd watch this 140, what is this, 144-ish, which is the 200-day. We'll see if it could hold that. And then it doesn't really relate so much to Apple, but I might as well go through it while we're talking about IBM. Apple had that loss of momentum when it lost the 8-day and 200-day, and then yesterday it did hold right there. But to me, I like it when the trend is strong to the upside, and it kind of broke that. So it's going to be in the penalty box until it comes out with earnings, which are not this week, it's next week. If you're long it, maybe be long it versus this. If you went long on the close, it's up 50 cents. Some guys might sell the open. Here is your gap resistance, which is what is that, 108.95 to write down. Maybe it tries to fill the gap, but if it pushes above, comes below, I'm not going to overtrade this now. If anything, I feel like I saw it up 70 cents. I might see if I could short versus a 15-minute high for it to get red. But anyway, it's a little bit broken, a little loss of momentum. But the Microsoft, this chart still looks unbelievable. look at it, it's above every moving average. It's not below the 200-day, it's above it. It's not below the 50-day, it's above it. And it's above the 8 and 21-day with a nice push above a key spot with almost like a day one. You know, if you had the red dog reversal long here, you'd be chilling. Anyway, here's the prior highs. I don't know if it's going to take it out with authority before its earnings on Thursday, but you know, it's not giving you any kind of short signal yet, and it's up. It's, you know, not in the same business as IBM, but you know, I go over the three of them together because they're the old dogs.
Right.
But they know a few new tricks.
Yeah. And then Goldman Sachs, they just reported a few minutes ago. How do you think they react? Wasn't anything too special. Are you looking to set up any other banks because of this?
Well, you know, I don't think, it seems like you don't need much, you know, anything too special to rally, and Goldman Sachs has been the laggard, so it'll be interesting to see whether or not, you know, they, it rallies off of it. When I came in here, you know, I saw it real quickly. It seemed like every segment of their business is lower, but the stock has been pricing in that. Revenues were also down. I think out of all the banks, it was one of the worst ones, so we'll see what happens here. Goldman Sachs, you look at the chart, you know, look at the downtrend that it's been stuck in. You know, it's below the 200-day, it's below everything, so it's not like it was expecting anything good. So we'll see if they try and sell it and it holds, so just say it holds this 157-ish, you know, and people are trying to short it, maybe they get in trouble if all of a sudden it goes green and takes out this spot here. So I would say, you know, see if it holds this 157. If it holds 157 and starts getting above 160, you know, maybe it plays catch up. I've seen this do this many times, so I'd be careful. I don't think it's worth your time to be short in Goldman Sachs today. You know, but we'll see whether or not it could work. And if it starts getting above this spot, it probably ignites some of the other banks that, you know, already reported and look, you know, better. Like look at JP Morgan. JP Morgan's already above the 200-day. I'm actually in a little JP Morgan. I'd love to see it take this level out to go to the upside, maybe, you know, fill this gap at some particular point. But it's going to need Goldman Sachs to go up a few days. Bank of America, Chelsea and I talked about buying the dip here yesterday around 1380. Well, the reason why was because this was the prior high, which, you know, prior resistance turns into support, and it did come into support. Now we'll see whether or not there's enough strength for it to go up to its 200-day. And I guess lastly, I'll just show you Citigroup. You know, Citigroup on Friday, we had a nice fade. Remember I said, you know, it went up on JP Morgan and Bank of America, that it probably sells off on this. Well, you know, yesterday was a decent buy the dip, and now I think you could be long Citigroup versus this 44.21, and then at some point maybe he gets enough juice to take that out. So we'll see how that all, you know, figures itself out in the next day or so.
ILMN re-announced a bad quarter. How does that stock look to you, and the bios, I guess? The bios, can you add that in?
Yes, well, ILMN is one of the big dogs in the bios, and I think actually it pre-announced. I wasn't really focused on it. I got a text yesterday saying ILMN's down 30 points. So to me, I'm like, ooh, I'm long the LABU, which is an ETF for the bios. This could hurt me tomorrow. So thank goodness everything's up for now. You know, if you look at the chart of ILMN, you know, you'll see that, you know, I don't think anyone was really expecting it. You know, so if it was a pre-announcement, there's definitely some traders trapped, which is why I go with ETFs for bios, not individual stocks. Well, anyway, looked like it was breaking out, and now, you know, it's down about $30. So here's one level of support, 140, and here is your next level of support, closer to 130. So if it would hold here and come off of it, I think it's somewhat contained. You know, if it opens here, tries to rally, can't, and starts heading lower, I think some other bios will probably get a little bit scared. You know, recently the IBBs we've been, you know, focusing on. It's been a really nice trade. You know, this is when I put on my options and I tweeted about it and gave guys a really nice trade. He went all the way up to, you know, this resistance and then came back in. It gave you a red dog reversal right here before another push. Held the 8-day yesterday, and now I think a lot of traders, including me, would love to see it trade above this and head towards the 200-day. You know, I just don't know if today will be the day because of, you know, ILMN. You know, if you look at the LABU to give you a corresponding pivot, you know, this thing is a 2-time ETF. It was as high as 240. It's been absolutely annihilated, probably because these things are also built for decay and to become zeros, but hopefully not soon. Here is your spot. Okay, we'll see what happens. I am long it. You know, can it get above this 39 and stay above and push? You know, or, you know, does it need a little bit more time because of potentially the pre-announcement of ILMN? And this is your support. So if you want to be long versus 34.24, and then perhaps we get another trade if all the other bios go up and put that stock in its corner.
Disney was a big focus of ours yesterday, and it had a really good day. I know you're still long. What's your target there?
Yeah, that was, we talked about the movie Jungle Book, and I was, again, thanks to Chase, my son, who's on Fridays, like, oh, Jungle Book's coming out, and I was like, oh, this could be like another Lion King. And then I saw that the potential projections for revenues was only 60, 70 million. I'm like, this is going to do over north of 100, and it could be another whole franchise. Well, anyway, it got upgraded and it went through that 99.80. You look at the chart here. The reason why, I liked it is, A, look where Disney has come from, and it's one of the blue chip of all blue chips. So you had a sideways channel with the market acting well. I figured, it can go and continue. So here it is, day one. Next spot to me, I think, is close to 103. It's at 102 now. If you want to trim a little bit just so you could trade around it, that's fine. I always trim a little bit into an up open, but I think you got to hold at least some to this spot, because again, most named sectors and even bad ones are getting to the 200-day, and Disney is far from a bad one. So I still like it. I just wouldn't add on strength now, only on a pullback.
Yesterday, oil started weak and then gained strength all day, and it became pretty impressive, the oil stocks. What is some level of resistance for the XLE now?
Yeah, remember yesterday we talked about buying the dip in the XLE. I was like, you know what? The 62 looks good, and we'll see if it could hold. And not only did it hold, it actually led the market up, which I was definitely not expecting. So if you look at the XLE now, you'll see, the reason why I came up with 62 is not because it was my lucky number. My grandma, bets it on, when she uses Lotto or something. That's a bad joke, but it was because this was the gap. Here was the gap where it held. Here was a 21-day. So why wouldn't you give it a look there? And it happened fast. So happened fast, came back towards the 200-day. So now see how it deals with this pivot. It's a little bit above 64.75 is that spot. Maybe it pushes above and continues, or maybe it pushes above and fails, but this engulfing day, very, very impressive. And if you want to take a longer term look now, it hasn't been above this in a long time. And if it gets above it and stays above it, I guess your next big point of reference is not too much higher, but right around here, which is north of 67.50, and then this spot. So don't just short it because you made a lot of money shorting last year. This trend is still intact off the lows, and now we'll see what happens here with the 200-day.
Metals are up this morning as they still have been acting pretty random, but the GLD did hold the 50-day. What are your thoughts there?
I think that they are random. I think some guys bought 117 and sold yesterday, and it closed weak. So there might actually even be some traders trapped short gold. So I'll show you on the chart why. You look on the chart here, and you look real close up to yesterday. It seems like if I was trading this, I would have been short versus long going home, because you have your high, which is right here, going across. Then you have like a lower high, and then it's been bouncing off the 50-day, but it seemed as if closed red, and it could break this, but it's up $1. So if you're short it, you have to figure out what's next. Maybe it starts getting above 120.35, you better cover. But so to me, this channel is still intact, but from day to day, it just hasn't been trading so well. So see if it holds up. The miners did come in and test its prior breakout and held it. What's a prior breakout? This was the old level right here, and it came back to it. Broke above it, came back to it, so now I guess you'll see whether or not it has enough juice to break above this. And one of my smart friends, Mr. Dartley out there, has been focusing on silver, and I haven't looked at silver in a really long time. And look at this trend, okay, and it seems like lately it's trying to act a little bit better, and it's opening up above this 1560, and it does seem if it could hold above that, who knows, maybe you get a move towards 1650 or 1750, but overall, it seems like it's acting better, and I guess look where it came from. So just don't start shorting silver, because that's what's been the right thing to do for the last 2 years. It seems like maybe it wants to have a better move, kind of like gold.
Okay. Any more closing thoughts for us?
I was supposed to go on Fox Business yesterday, and basically the security guard screwed up. I didn't get in there, and they wanted me to talk about Dow 18,000. So I wrote up all things saying, Dow 18,000, we crossed that spot 40 plus times last year and failed 40 plus times. I mean, it's a little bit more significant because this year, in January, I don't think anyone thought we'd get back to Dow 18,000, let alone this quick. So what's the moral of the story here? I guess if you have a long-term plan, put money in every single month, especially if you're around our age. Chelsea, how old are you?
24.
24. Like you start putting in monthly money now. You know, I could actually use the guarantee word. You'll be in great shape when you're ready to retire a long time. You know, and for me, you know, I have a 529 plan for my son. He's 7. You know, so even if we had 2 years lower, you know, that's fine. That's a better average cost for him. I know a lot of my friends that have kids in college now. They started in the year 2002, kept going through the financial crisis, got them a great average cost, and now that paid for their kids' college. One I think's in Indiana right now, and the other one's in Maryland. You know, and then you have trading for a living. You have trading for alpha. You have trends. You know, and one rule that you could always remember is above the 8 and 21-day moving average, you try and be long and flexible. Below, a little bit more tactical and maybe short. But don't fight it, because looking for tops the whole way up not only is going to lose you money, but you're going to lose a lot of opportunities with great setups, you know, that keep presenting themselves. So look for setups, not a top. When something changes, hopefully we'll all figure it out together.
Great. Thank you, Scott.
You're welcome.
Everyone have a great trading day.